So, hi everybody, this is Hustle Hub. I'm Giacomo. Today I'm with Gabriel Indombo. He is a CFA chartered. He has his own newsletter on Substack. So, Gabriel, please introduce yourself. First of all, tell us a bit about what you do and what you specialize on, and then we'll jump into the topics of today.
Thanks for having me on your on the YouTube channel. As you have indicated, I run a blog on Substack where I write about market and macro, basically looking at what's happening around the world, whether it's geopolitics or whether it's central bank when they meet, and particularly on rate market. I give my view around there. If you got time, you can go to Substack and you can see what I have published there. And I'm happy to be here to talk about the ECB meeting of today.
Okay. By the way, the link to his Substack will be in the description. So next we'll so tell us a bit about what was said in the ECB report today and what that means for the market, and how later on how that differs from the policies that other major central banks did around the world.
Great. And I think let's start at the very beginning before the meeting. I think the market was expecting this to be a very hawkish Thursday, but to their surprise, it was a bit more dovish. So the market expected at least the ECB to indicate or to give kind of more firm guidance in terms of how they're going to bring out their monetary policy going forward. So market wanted to hear when ECB is going to end their asset purchasing program. They've already added the pandemic purchase program in March. So they just wanted to hear the last program that was going to end in the third quarter of this year. But the market wanted more a firm date, like a specific date. When is those net purchases are going to come to an end? So ECB did not want to commit a date. So in that regard, and we can consider this meeting to be more dovish than hawkish. Another thing also that ECB have indicated in the meeting is that they have actually compared the euro area economy to the US economy, and they have actually indicated that the US economy is in a different situation compared to that of Europe. And I think here they are more referring to say that the euro area economy is much more closer to the Ukraine and Russia situations. As we all know that Europe is very much dependent on the energy and gas supply from Russia. And you can understand how the euro area economy is being impacted by the rise in energy prices and gas. And I think the ECB is just trying to be more cautious going forward. And they have actually indicated in the previous ECB meeting that they want to maintain gradualisms, they want to be flexible, and they want to be optional. So, and again, this affirming to the market that they will treat a meeting by meeting, and they don't want to give too much at this meeting. And the market didn't like it.
Okay. And can you make a comparison with the other major central banks? I know that, for example, the Fed took a very different approach to the situation. Can you make a little bit of a disclaimer why that's so different, and how you think will impact the markets going forward?
Yeah. So the Fed, as I said, the Fed economy is in a different environment compared to that of the European Union. The Fed inflation is much higher. It's actually running at 8.5% compared to 7.5% of the euro area, although we expect the euro area inflation to come out next week. But another thing that has been driving the US inflations, the US labor market is much more tighter than the labor market in the euro area. It's another reason that ECB president has indicated to say the inflation they are seeing in the euro area is not going to wages. They are not seeing that going to wages. They have also indicated that in their June meeting, they will have more new projection. Then they will know how inflation is filtering to wages. And again, the Fed the Fed or the US economy is in a much better position that is quite strong compared to that of the Euro area, meaning the US economy should be able to handle all the expected hike that the market is expecting to come from the Fed. So from that regard, the ECB has to be more careful not to hike too much. But even if you look at the market pricing at the moment, the market is indicating that the Fed is again going to hike for the second time in their May meeting that's coming on the 4th of May, while the market's only indicating that the ECB will only be able to hike in the second half of the year, which is around the third quarter of this year, where after they've ended their asset purchase program. And even after the meeting of today, the market was, in my view, was even reflecting, before the meeting was reflecting more hike of about 4 hike, but after the meeting, they've actually reduced those hike to 3 hikes. So in my view remains that I think it will be very difficult for ECB to deliver 3 hike. I think if we're going to have one, we're going to have a hike, it's probably 1. Why am I saying so? Because of the expected slowdown from the economy, or the hit that we're going to expect to come from the war. But also we also need to consider that the Euro area is very much integrated with the Chinese economy that is going down, is suffering from lockdown and a bit of property market that's happening there. So they depend a lot on their export, depend a lot on Chinese demand. And we are seeing that already with the German economy that is going to be impacted by the import from China. With that in regard, then the ECB is just trying to be careful and not to impact growth that's already expected to slow down with hikes. And I think again bring in a bit of the Bank of England. So Bank of England has delivered a number of hikes. Of course, they were a bit more, their inflation was much more higher in the very beginning compared to that of the Euro area, and they are also going to hike now in the May meeting, but after that probably they will deliver another hike in July, and then after that they have to pause. Why are they pausing? Because then the monetary policy, the fiscal policy in the UK is consolidating. They basically don't want to be tightening policy at the same time. The fiscal side is also consolidating. So I think in that regard, that's how we see the ECB will play out compared to the Bank of England and the US and the Federal Reserves. And in terms of emerging market central bank were quick to hike in 2021, especially of Brazil, Chile, and Colombia. Of course, they had their inflation are quite high in double digit, but I think they're more hiking to get ahead of inflation, and I think they have built up a bit of buffer. I think they are likely to slow down from here, but also some of these emerging market country like Brazil and even South Africa are going to benefit quite a lot from the commodity prices that have gone up given the war in Ukraine.
Okay. So one thing that you mentioned is China slowing down. What are the countries that will be more affected by that? And as a result of that, could you see some policies that you see coming right now change a little bit?
Yeah, so the countries are going to be impacted. I say Germany is going to be impacted. As we all know, Germany is run on an export basis. They depend very much on export. So we expect then the demand that's coming from China to calm down a bit, and that will be reflected in Germany economic activities. Another economy that's going to be impacted, although not much, is the South African economy. South African economy export about 15% of their GDP to China. So mainly most of their commodity go to the property market. The property market is also not doing quite well there. But however, the government in China is trying to contain that slowdown with spending on infrastructures and also easing monetary policy. They are actually the only bigger economy that is easing while everybody else is tightening monetary policies. So of course there'll be a bit of also other of course other countries will be impacted. As you know, China is the second largest economy, and whenever China sneeze, the rest of the world will definitely catch the cold there, right? So we expect a bit of something there.
Okay. And another thing that I would like to mention is, of course, the increase in commodities prices has benefited certain countries and some others not. And for example, Europe has been hit hard by the increase in commodities prices and so on, and that has reflected the current monetary policy. And but now Europe looks like it's looking for new partners. Like you see European ministers going to Qatar, going to Algeria, and so on. How are these new deals impacting the commodities prices? And some other countries are starting to talk about embargoes on Russian commodities. Is it possible, and how, and if possible, could that impact? How could that impact the commodities prices going forward?
I think the Europeans, I mean the European Union, I think they have probably regret their reliance on Russia commodities, particularly energy and gas. I think at the moment it's a bit difficult for them to just completely replace Russia's energy and gas. I think in my view, what the European Union has learned so far is that going forward, they need to reduce their reliance on Russia or their reliance on any other country that they don't consider their strategic alliance. I think going forward, then we expect country to trade more with the country that think like them, the country that believe in the same thing like them, and this is the same message that the US are preaching. So all these talk that the European Union or the Europeans are having with these different countries they are trying to at least coming up with new deals so that at least they can start to get some of the energies and energy supply from those countries. But of course, I guess on oil is probably easier, but I don't think it's a bit extremely difficult for gas to be replaced. Imagine I think Europe get about 40% of their gas from Russia. So to replace that in a short period of time is not easy. And I think another message that the EU have learned, or what they will try to weaken the reliance on Russia, they will try to speed up the renewable sources going forward. And I think there'll be a lot of spending coming out of Brussels to speed up that process.
Okay. So I'm done with the questions. So I want to thank you, Gabriel, for your contribution and for the insights that you shared with us. For those who are watching, make sure to take a look at Gabriel's newsletter. It will be in the description. And so this is it for today. Gabriel, if you have anything left you want to say, you're free to do so. And if not, I really want to thank you for being with us today.
Thank you very much. Thank you very much for having me on your YouTube channel. I'm looking forward to do more YouTube channel, to do more show with you. And I think let's keep it that way. Thank you very much for the opportunity. Have a good day.
Thank you. So this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.
See you now. Bye.